Agency owners have a ton to think about every single day, from serving clients to growing the business, leading the team, et cetera, et cetera. Then there's the back office grind. Things like reconciling commissions, payroll, tax prep, HR compliance, blah, blah, blah. It's all necessary, but incredibly time consuming. That's where our friends and partners over at Agency Point come in to help. Agency Point specializes in all the details agencies can't afford to ignore: accounting, tax, HR, and legal. They can even handle commission reconciliation so that nothing slips through the cracks. And if you've heard us talk, you know that this is one of the most important things that agencies must do. By managing the back office essentials, they free up agency leaders and their leadership team to focus on strategy, growth, and clients. An agency that works with them told us, Agency Point gave me back 10 hours a week. And now I spend that time building my business, knowing the foundation is solid. If you're looking for a trusted partner who can help lighten the load without competing for your strategy seat, check out Agency Point. Welcome to the Insurance Refocused podcast, where we're highlighting real agent stories and how they are innovating to respond to the changes and challenges happening in the independent insurance industry. My name's Lindsay, and I can't wait to introduce you to my amazing co-host, who just so happens to be my mom, Carey Wallace. Mom, how you doing today?
I'm doing well, Lindsay. I'm coming off of the marathon trip of the fall and happy to be at my last event, at least for this month, about 2 more for the end of the year, and feeling like I've gotten to spend a lot of quality time with some great agents. So I'm doing really well. How are you doing?
I'm good. I'm thankful that I got to sit this event out because I feel like I've been on the road a bunch, which seems like small potatoes compared next to you, where you're gone at like 3 different places every single week. But I am happy for both of us and for Agency Focus that our schedules are slowing down here a little bit, and we'll get to be back in our home offices and get to be doing some work. So it's going to be a good time.
I would love, love, love if I'm able to put a petition into the insurance gods and say, let's spread out the love, man. Let's not put every event in, 4 months of the year. There's actually 12 months of the year. So let's maybe spread it out. I wonder who I write to. I would love to be able to figure out that person that I could put my lobby and my votes in for that. I bet agents would feel the same way, So anyway.
I'm sure they would. Well, what I want to talk about today is we have been releasing some case studies through Agency Focus that are based on real agency data and agencies that we've been working with for the last 5 years of our company. And one that we just wrote was really impactful, and I've been talking about it a lot one-on-one with agents. I know you've talked about it up on stage a couple times, so I figured it's about time that we recorded a podcast talking about how we helped an agency double its value in 3 years, because that is a crazy thing to be able to help somebody do.
Yeah, it is crazy, but it also shows you the power of getting a baseline and understanding what's driving the value of your agency and being able to take that knowledge, put it into action, and drive different results inside your agency. So, to be quite honest, we can do this through valuation, but this is really the purpose of our CFO offering, where you can really take some benchmarking data or information about the risk inside your agency and turn it into, I'm going to make it a project and I'm going to work on mitigating that risk or strengthening the agency or changing the strategy, and over time what the impact could be, because there's these levers that you can pull inside your agency. So this is a great example. This is also a really, really fantastic agency that took everything we said to heart and was very motivated to position their agency for an internal transition, which is pretty cool. So I love seeing the impact of someone who not only wants to know, but wants to put the work behind improving their agency, which, by the way, was strong in the first place. Like, it wasn't that it was a
Hmm.
terrible agency in the first place, right? So
Right.
it's
Right.
very rewarding to see the fruit of that kind of work. So yeah.
Yeah. So I would love to start. Let's give everybody a baseline of, let's just say, we're not going to tell you what the agency is. Obviously, that would breach client confidentiality. But let's talk about, what did this agency look like the first time we valued it?
Yeah, sure. So this agency was roughly about 3.5 million in revenue. So really strong agency, and they were operating at a 27 to 28% profitability, which is super strong as well. So they were nice size and also really nice profitability. And then I'm happy to give you a couple different statistics on what that looked like, what their makeup was, and some of their risk factors as well.
Yeah, yeah. I'd love to talk about the profitability for a second. A couple agencies that I've been working with recently, when I ask them what their profitability is, they're not 100% sure. So I think in order to give agencies like a full context on, when we say they had a 27 to 28% profitability, what does that mean?
Yeah, so you take an agency's revenue less its expenses to get to their net profit. And then when I'm talking about their operating profit, I'm talking about their EBITDA, or their earnings before interest, taxes, depreciation, and amortization. So I'm taking that net profit number and I'm adding back any interest they paid for loans that they have, because that's not an operating expense. I'm going to add back any tax they paid based on the profitability of the agency. I'm going to add back any one time expenses that are not expected to recur. So they might have been investing in things that were one time, like rebranding or new computers, or maybe training for their staff that they're just doing one time and isn't going to be an ongoing expense of the agency. I'm going to subtract any one-time income that, also isn't going to continue into the future. That might be a sale of an asset. Like, they might have a car that they sold, or they might have had a small book of business that they sold, or whatever. There could be just income that was one time. Maybe a carrier offered some kind of bonus that isn't going to recur every single year, but they were eligible for just this year. So we would subtract that, and we would get to a reasonable owner compensation, based on the size of the agency, what the IRS requires for an agency owner's compensation to be included in the P&L, and then basically come to what is the operating profit of the agency. A pro forma operating profit, or EBITDA, is what I'm talking about. And so when I say it's a 27 to 28% range, that means 27 to 28% of their total revenue turn is actually left over as profit for that agency. So they have a really nice size revenue. They have a nice percentage of revenue, or percentage of profit. And then here's some factors that, when they first came to us, I'll describe their agency. So they had one owner that owned the entire agency, who was approaching retirement, looking to transition internally, but hadn't started any formal succession plans in place, and had no employment agreements in place with their agent, or with all of their staff. Second, they had a compensation structure that was heavily weighted towards individual producers. In fact, it was richer than what the industry average is, making their ongoing profitability going to be a challenge to be able to maintain that as producer books continue to grow. They were there were producers and CSRs being compensated for maintaining the same accounts. So they had no threshold where accounts became house accounts. So producers were being paid retention commission on accounts that they were also paying account managers and CSRs to maintain, which again was putting some pressure on their profitability. And they had some operational redundancy due to lack of documented processes, antiquated systems. They just, they had some opportunity in order to really create some efficiency on their agency when we first met them.
Yeah. So as we, in the first meeting, talk to me about what kind of recommendations were made for their agency in order to complete this like transformation of their agency.
Yeah, so the agency owner was very adamant that she did not want to sell externally, even though her size would put her in the range of what private equity would be interested in. She was very interested in really elevating two internal people, one that is operational and one that is sales focused, as her future successors. So, number one, we needed to put a perpetuation plan in place that created a pathway to ownership for both of those people. And then number two, we needed to really take a look at the compensation structure inside the agency. And, we had some aging producers with large books. We needed to figure out what that looked like and really right size that compensation, institute some thresholds and some house accounts for the agency. They needed to do an AMS upgrade. They were on an AMS system that was not going to be supported into the future. So they needed to upgrade that and get on the cloud rather than on, server-based a CRM. And that compensation structure, though, was really the big thing, and succession planning. And in that process, they were able to reallocate some of the work through their account managers to make sure that they had the right capacity expectations for their house accounts and for their service people, and were able to create some capacity by tiering their accounts and how they approach those accounts by looking at their processes, looking at their book of business, and figuring out what was a house account, what was going to help be maintained by the producers, and what was going to be reallocated. So it really was an opportunity for these two new successors to take a leadership role in both transitioning the technology and stratifying those accounts, and thinking about really who's responsible for what and setting the compensation. It's kind of a win-win where you can give some opportunity for some new leaders to step up and take some operational responsibilities from the owner that was looking to do that anyway. We just created the projects that they would be able to focus on.
Yeah. Well, and it seems like this was a really good opportunity in order to do that for an agency who might have been looking to sell externally. That would be a really hard transition to make at this stage in the game, right? You can't really go back to your producers who are performing really, really well and say, hey, actually, I'm thinking about selling to PE in 4 years. You wouldn't say that, but I'm thinking about making a change to your comp, and I'm going to absolutely change the entire structure. I don't think that would work very well. So if she were interested in selling to PE, that would have been a really, really hard, tough situation to manage, right?
Yeah, I think regardless, if you're transitioning internally or externally, taking good care of people is really important. And the fact that she was creating an internal perpetuation, number one, she cares a ton about her team. And that was apparent. So it made these conversations really authentic to say, hey, listen, we're just trying to right size the workload and the compensation aligned with each of these workloads. There were some people at retirement age that were ready to slow down anyway, but it was really a thoughtful approach. And it wasn't saying, hey, I'd like to position this so I can sell out. I mean, listen, people can make whatever decisions they want, but the messaging inside this agency was, I want to set up this next group of leaders to continue the agency the way that it always have, with the same exact culture, with the same exact way that we serve our clients, and I want you to be part of it, but we need to make some changes just simply because this right here is not positioning us for the right situation going forward. And that message is easier to say when the attitude is, I want to continue to have you work here as long as possible under the same culture and the same type of leadership, is really a powerful message. So yeah.
Yeah, yeah, that's awesome. So the other piece that I would love to just chat for a minute about is recommending that they change an AMS system. So what level does that actually play in the value of an agency when you're talking about, I'm on this specific AMS, it's going to increase my value to move to this? What does that actually look like?
So for them, it was hard to get some of their reports the first time around. It was limited. Their AMS system limited the amount of clarity we could have on their book of business report. It had some limitations, but the biggest thing was they were going to not have support for that system going forward. So really, it wasn't really just us and efficiency. It was more of this is a large enough agency, and for any agency, you need to make sure you have the right support and you've got the right ongoing customer support for the agency management system that you're using. So they knew they were facing that transition. I think for them, it was a great opportunity to have one of their future leaders step up and drive that process and allow to be able to gain buy-in from the entire team, lead through change, et cetera. It really strengthened that person's ability to step into a leadership role in a pretty significant way while having the current agency owner there to support them, was really important. And it also provided clarity for those new future owners to have an understanding of the business that they may not have had prior. And, really set them up to create some of these processes and efficiencies in a different way that they had limitations in the previous system that they were using. So again, I don't know that was necessarily the biggest game changer. Was changing the ownership, changing the comp structure, changing the capacity, but you don't really understand the capacity if you can't get to clean data on your book of business. So yeah, that actually played a role in a couple different factors.
Awesome. Well, so let's talk about the results that we're seeing. So they came in, got a valuation about 4 years ago at this time, got these recommendations from you, made some changes, and then 3 years after their original valuation, we did an update to their valuation, which we do for agencies on a pretty regular basis. I'd say agencies that come to us for a health check that aren't a fractional CFO client, we probably see once every 3 or 4 years come back for a second valuation update. Let's talk about what their update showed us.
Sure. So in that time frame, they did put together a pathway to ownership for their two successors, where they bought roughly 20% of the agency, which was nice. So they moved into ownership. It gave them a period of time to buy a small portion of the agency from the owner. It also allowed them to have ownership in the agency. So if they that was owner finance, so it was at a lower interest rate over a shorter period of time, that allowed them to then be positioned if they needed to get a bank loan. For the second portion, they already owned 20% of the agency. That was first and foremost to set up a really solid pathway to ownership. Number two, they did make that AMS change. They had two people retire on their staff, which were planned retirements. They one being a producer, one being a longtime CSR. They were able to recruit a couple new producers in a comp structure that made sense. And they saw an overall growth of over 40% over that 4 year period. Some of that is green new business. Some of that is rate. It's a combination of both, but the agency absolutely is in a position and in a location where they grew 40% over that period of time. I believe that That also allowed them to have the capacity, by getting that system in place, tiering their accounts, understanding which service person was handling what. They were able to really also grow and maintain profitability, much higher profitability rates, where their EBITDA actually doubled during that time with that growth. They didn't have to add a one for one service person. They were able to leverage some VAs and leverage some automation in order to help manage that book of business. And as a result of tiering their accounts and putting those processes in place, so they had standard level of care across their book of business, which really made a difference, and also, helped with the stress that was created during that high growth time, and the need to remarket, et cetera. So they managed that and maintained a higher retention rate. But that EBITDA doubling was unbelievable, which in then turned, so not only did their operating profit or EBITDA go up significantly, their multiple also increased because they reduced the risk based on, they reduced their risk from a single ownership with no contracts. When they went through this process, they actually got everybody an employee contract in place, but they also, their performance at a higher growth rate, higher profitability, caused that multiple to also increase, making both sides of the equation actually increase, caused their overall value to double, which was unbelievably impressive. Yeah.
Unbelievably. My favorite part about this case study that we haven't talked about yet is that carrier relationships also strengthened throughout this process. And coming from the network world or aggregator world, when I was with Indium, that's something that I saw a lot of. How do I help create deeper relationships between agency and carrier? And I was kind of standing in the middle of that. And I think sometimes agencies have like a little bit of like, carriers are doing this to me. But realistically, for the agencies that are operating in this way, that are really building a business, um, the agents or the carriers look at you as a partnership. And when they see that you're strategically doing things to strengthen your agency, to make your agency better, they will start talking to you more as a partner, and rather than like a, parent child or teacher student, anything like that, that sometimes exists in our ecosystem. So that was a really interesting thing for me as I was doing some deeper research into this agency as well.
Yeah, I think growth and performance really set the tone here. And, I think carriers are really excited about agents that put real effort into developing the next generation of leaders. This agency owner was really smart. She didn't say, I want to transition ownership and I want to drop the keys and leave. She said, I want to start that process, be here to mentor the people that are going to take over, be here to answer their questions, support them in their decisions that they're making, and some pretty big decisions when it's an AMS overhaul, and introducing VAs into their system, et cetera, allowing them to make some decisions and be their raving fan during that, to show the rest of the staff that they are supported. That just ripples to your staff trusting you, your carrier partners trusting you, your customers trusting you. So she did a really nice job of doing a transition of responsibility prior to the entire agency ownership being transferred, which I think is key. Everybody does this different. I'm not saying there's one way that's better or different, but it definitely positioned the next generation of owners in a pretty solid way, with both their current staff, the carrier partners, and their customers, which is really great to see. So, yeah, it's a win-win all the way around. We can highlight the things that people need to do, Lindsay, but the reality is the hard work has to happen on their side, and they did a ton of hard work. And they did it as a team, which was really impressive to watch. So, yeah, it was really rewarding to see your advice be put into play and have them reap the benefits of it.
Yeah. And while you're just operating, it's hard. I mean, even here at Agency Focus, right, we are obviously very owner dependent. You're always away on a stage. And so it's funny as I look at things like this, I think, well, we're not perfect either. We still have work to do, but we recognize those pieces, and it's hard to recognize within yourself.
That's right.
Right. It's hard to look at your own agency and say, oh, these are the risks. It's like editing your own paper, right? Like it's super hard to do. So sometimes you need that outside perspective in order to come in and say, hey, this is a problem over here. Let's focus some resources here and deploy some resources there so we can start to make it a better situation. So I'm glad we were able to help this agency. There is no shortage of examples here when it comes to, transformations. We, suggested something and things like this happen. So
yeah,
I'm excited that we got to share these results with everybody.
Yeah, I would just tell the listeners if there's a situation out there that you're thinking about inside your agency and you'd love for us to highlight a situation or a challenge, man, tell us, put it in the comments or reach out to one of us because we get to see a lot of different agencies. And the whole purpose of this podcast was to bring clarity and also community around some of the things that you're facing as business owners in general, as you're thinking about transitioning internally to a partner, selling externally as business owners. Really, it's the same journey regardless of what industry you're in. But if there's things that are on your mind that we can get clarity on and help you, I would love to hear what those things are and love to share those stories to help you through your journey.
Absolutely. Shoot us an email. The best way to reach is probably my email. It is Lindsay with an A, LINDSAY at agency-focus.com. Shoot me what you're working on. I would love to hear about it. And if I have a case study that exists, I'd love to either send it to you or make sure I can create one and send it to you as well.
Yeah.
All right. Well, I know that you have to get on a plane, so I'm going to let you get to the airport and we will talk to you later.
All right. Thanks for listening, everyone. Talk to you next time.
Thanks so much for tuning in to the Insurance Refocused podcast. If you enjoyed the episode, please be sure to hit subscribe and leave us a review so you'll never miss us. Want to learn more about how Agency Focus can help you grow your agency? Head to agency-focus.com or email Carey directly at carey@agency-focus.com. If you need to get in touch with me, feel free to shoot me an email at lindsay@agency-focus.com. Thanks so much for tuning in. We'll see you next week.